Assalamualaikum. Today our group members will present about MFRS 134 and MFRS 8. Starting with part A. Basically, MFRS 134 ensure we get timely financial update period shorter than a year. Whether it's a complete or condenses, we must include the core statements and the selected notes. Use the same accounting periods policies as a company annual report. However, we assess materiality based on the interim figure themselves, and we include the comparative from the previous years. It's all about staying transparent and managing those seasonals between annual cycles. Based on the interim financial report for the fourth quarter ended 31st December 2025, there are two significant events that affect the entity financial position and performance since the last annual reporting period. The first event occurred on 2 July 2025 when the Federal Court ruled that Tenaga Nasional Berhad is a utility company under Schedule 7B on the Tax Income Act 1967, not the manufacturing entity under Schedule 7A. Consequently, previous reinvestment allowance claims were incorrect. The impact on financial position include prior year adjustment, which is reduced retained earning. A payment reduced cash and bank balance. As a result, current liabilities exceeds current asset as at 31st December 2025. One of provision recognized were financial years 2003 to 2024, the effective profit after tax. The second event occurred on 26 November 2025 when the Ministry of Finance granted approval for investment allowance under Schedule 7B on capital expenditure, deductible from future income. The investment allowance utilized for the 2025 financial year, reducing current tax liabilities. No provision for the potential tax liability was required as the debt reporting. The effective tax rate of 2025 was 2.8%, lower than the statutory rate of 24%. Both events are significant because they require reinstatement of prior interim periods under MFRS 134, affected the entity liquidity and tax position. They were disclosed as unusual items and prior year adjustment.
Next, I will present the interim reporting period based on quarterly report of Tenaga Nasional Berhad. The company prepares its interim financial report on a quarterly basis. For this analysis, I focus on fourth quarter interim report ended 31st December 2025. For the current interim report, the period covered for a statement of profit or loss, cash flow, and changes in equity is from 1st October 2025 until 31st December 2025. Meanwhile, the statement of financial position is reported as at 31st December 2025. For comparative interim report, the corresponding period is from 1st October 2024 until 31st December 2024, with statement of financial position as at 31st December 2024, which has been restated. In addition, there is an extra comparative position shown as at 1st January 2024, which represents the restated opening balance. Overall, this shows that the company provides both current and comparative quarterly information to ensure consistency and comparability for users of financial statement. Next, this shows comparison of selected financial performance between current and comparative interim report of Tenaga Nasional Berhad. The interim financial report of Tenaga Nasional Berhad shows that the company overall financial position has improved as the total equity increased compared to the previous year. However, liquidity has weakened as current asset decreased and net current liability increased, indicating higher short-term obligation. Although the company recorded higher profit and improved overall performance, cash flow from operating activities declined. In addition, the company spent more on investing activities, which such as expansion or capital investment. As a result, the cash balance at the end of the period is decreased. Overall, the company shows strong profitability but weaker short-term liquidity.
MFRS 8 operating segment adopts a management approach where a company external financial reporting must identify and disclose operating segments using the same basis that management uses internally to make decisions about resource allocation and performance assessments. The information disclosed must be reconciled back to the main financial statement to ensure consistency. Its main objective is to provide financial statement users with detailed information that help them evaluate the nature and financial effects of a company's different business activities and the economic environment in which it operates.
To answer question 2, the chief of decision making is the person responsible for evaluating the performance of various segments and deciding how the resources should be allocated. This role usually held by the top management, which is CEO, COO, and also senior management. In Malaysia, we have Datuk Syamsul bin Ahmad, which is the CEO of Tenaga Nasional Berhad. Besides that, we also have Lloyd Tuan EE, the CEO of FAR570 Berhad.
The two types of segmental report used in financial reporting are operating segment and geographical segment. First, operating segments. Under MFRS 8, an operating segment is a component of a company that earns revenues and incurs expenses, is regularly reviewed by the CODM, and has a separate financial information available. As we can see through this snippet, a company discloses that its CODM, which is the group managing director, reviews the business based on two segments, which is Malaysian and Australia operation. The report shows segment results such as the profit before tax of Malaysia and loss before tax of Australia. These segments are identified based on internal reports used by management. This is operating segment report because it reflects how management monitors performance and allocates resources. Even though the segments are based on geography, they qualify as operating segment because that is how the business is managed internally. Next, geographical segment. Under MFRS 8, companies are required to disclose revenue based on geographical areas, even if they do not treat geography as their main operating segments. As you can see through this snippet, the company discloses revenue by location of customers as follows, like Malaysia, Australia, Singapore, and others. This is a geographical disclosure because it shows where the customer are located, not how the business is managed. It helps users understand the different economic environments the company operates in. In conclusion, the two types of segmental report are operating segment, which are based on internal management reporting, and geographical information, which provides additional disclosure based on customer location. Both are important because they give different perspective on a company's performance and risk.
The first benefit of segmental reporting is better performance evaluation. Segmental reporting allows users to clearly see which segment can perform well and which does not. This may avoid misleading conclusions from overall figure. Besides that, it can improve understanding of risk and business environment. By separating a company into different segments, users can identify which segment is exposed to specific risks. This is important because each segment may operate in different countries or industry. Here is the segmental reporting of FAR570 for Year of Assessment 2025. In conclusion, MFRS 134 ensures that interim financial reporting are prepared in a timely and reliable manner within financial year. Next, MFRS 8 enhances transparency by requiring companies to disclose information based on business and geographical segment. Here's the reference that we use for this assignment. That's all from us. Thank you.